Hey everybody, good morning. Welcome to a new episode of Stocks for Breakfast. My name is Pete Renzulli. Very grateful that you're here with me today. If you could just do me a quick yes, let me know the audio visual is good. We have a lot we're going to talk about today. We're going to talk about some of the strongest stocks yesterday, whether or not we're expecting follow through. We're going to do a deeper dive into the sector that we like the most heading into this week and actually going forward, which we kind of gave you a sneak peek there about which stocks I'm looking to buy as they move up the list of sector rotation. We're also going to talk about the classic head and shoulders pattern in the SPY ETF. And we're going to go into Fibonacci retracements and look for new levels that we expect the SPY to hold that bid. So we got a lot to talk about today. I also want to get some ideas from you. What are you looking at this week? What are you looking at this day? And we'll work those into today's list of stocks to buy. So we'll go over as many as possible. So stick around. We'll be back in just 1 second. Okay, so obviously with everything we talk about here, it's for educational purposes. It's up to you to make that final decision. It's my mission to help you make better decisions, okay? So what we're going to talk about first is sector rotation. We're going to get right into it. We're going to go right into some of the ideas. We've been talking about energy stocks for the better part of the last couple of weeks, maybe in about 2 months, actually, and financials. Financials are actually looking at some ideas that have rocketed higher over the last 2 or 3 weeks, pulled back a little bit. We're looking at a couple of buy the dips in financial stocks today. But we're actually going to focus on industrial stocks. They started to work their way up the list, and now they are some of the top ideas that we have today. So what I'd like to do first, obviously, I'd like to say hello to a few people. I really appreciate everybody being here with us today. Richard, good morning. Good morning. Gus, I believe you're out in the Bay Area, right? San Francisco. Let's see. Napoleon, good morning. Thanks so much for joining us. Two spiritual sisters. I actually love that. That's awesome. Let's see. Shane, good morning. Spencer, I love the Captain America shield. We got a whole comic book collection downstairs. I'm a big Marvel fan. I don't know if we got Marvel versus DC on the call today. Winnie, always a pleasure. Super happy that you're with us here. Sean Fisher, good morning. Who's that picture of your boat in the background? Wow, that's a nice colored boat, purple. Let's see, looking at Ride today. Yeah, we're probably going to talk about Lucid today too, right? Lucid's been in the news quite a bit. XPEV had some news today as well. Good morning, Carlos. Super happy to have you here with us. Let's see, Myers looking at DLTR, Netflix, and EA. I will tell you, you kind of jumped the gun there. We're actually DLTR and EA by far two of the strongest stocks yesterday. And let's see, Jazz Nola from, I'm going to say from New Orleans, right? Is that Nola means New Orleans? And Uptal G, good morning from London. Good morning. Thank you so much for being here with us today. Let's see, waiting to see what happens at 30 for Lucid. Yeah, I don't know if we're going to have to wait till 30. You know what? Let's go straight into what some of the things we're going to talk about today. So actually pull that stuff right back up. So we know right out of the gate, we're going to be looking at the industrials, but let's take a look at a little bit of news from yesterday. Virgin Galactic, big story. FAA investigation ends. There was a couple of different stories with Virgin Galactic with more shares being issued and just conveniently broke support yesterday. Same thing as AMC did yesterday. I don't know if there are a lot of people were looking to buy AMC stock yesterday, but we actually caught that on a new 20-day low. The morning the stock opened lower and then rallied, and Virgin Galactic kind of did the same thing where it just perfectly broke this longer term support, and then the news came out. So this will 100% be in my radar today to be looking for stocks to absolutely day trade. And you can see it's actually up 8% already if you go down into this window. However, we really need to get out of this little box first. This is one of the biggest things that you want to pay attention to, is how to build that position sizing. So we spent a lot of time yesterday talking about elevating your game as a trader, and net profitability is the ultimate where we want to get to when we're buying and selling stocks, right? And a part of that is understanding position sizing. A part of that is actually understanding when to go in there with full share size. And if we're looking at SPCE right now, Virgin Galactic, this news is amazing. It takes us right into that middle of that trading range. So we'd be looking, if it's a day trade, we can get a little bit more aggressive with share size because we can manage it. If it's a swing trade, today will probably be the first piece, and then we'll look to add on that over 27.50. So that's how I'm looking at managing SPCE, Virgin Galactic, coming off of this news story today, which is a pretty big one. If you were trading it with us in this window and this window, this stock is really, really good to be actively trading when it's in play, when it has institutional order flow. And today could have been the day. Today could be the day where it's starting to spike back up. So we got some news on Starbucks this morning. I know a lot of members of our community are dividend players, and Starbucks raised its dividend for the 11th straight year. That's a pretty big deal. The stock has really not been in place since it hit all-time highs. So we'll just take a look at that before we hop on over to some other ideas. And you can see here, we were actually pretty excited, for like a better way of putting it, about buying this dip over here after all-time highs. But earnings came out and just crushed the stock, and it really hasn't been the same since then. We started to look to bid over here. We started to look to bid over here, and none of those buying opportunities held. So the dividend might change things a little bit today. I doubt it, though. So right now, Starbucks as a trade or an investment is kind of off the table for us right now until we start to see order flow expand, at least from 1 week to the next. And we're not seeing that yet. So if we zoom out over to the higher time frames, we can see that we're still well offered into an inside week. And the monthly chart is actually now inside month to well offered. So that means that right now, over the last roughly 60 days of trading, 40 plus days of trading, institutions are actually selling and hitting the bid at lower prices. By the way, hitting the bid means that you are actively selling. You're not advertising to sell. It means that you're actively getting out quicker. So it's terminology that you need to know as an active trader. Okay, so I'm going to zoom on over. We just talked about Starbucks. This is a pretty big deal. And the reason I'm bringing it up with this guy, I'm going to try and pronounce his name, Chamath Palihapitiya. Obviously, he's the big SPAC guy in the market, right? He's kind of like the OG of SPACs right now. But what's interesting about this headline was also a headline from yesterday about Tesla and whether or not it's the right time to be buying Tesla stock. Cathie Wood also selling a big portion of Tesla stock. So I think that's pretty interesting. So kind of working our way over from Tesla into other electric vehicle stocks. For those of you that were day trading yesterday, we were actually, I'm not going to say salivating as much as NEO, XPEV, and LI on the day trading side yesterday caught a little bit of a bid yesterday, especially for the first 90 minutes of the day. If you happen to be an active trader, you can see here we were actually like, yeah, here we go. Finally bottoming out, looking for a spot to catch a bid, and then they just kind of melted. And this is really a good day trading lesson right now, that you really need to adjust your expectations for follow through. So in other words, your profit targets, or what kind of profits you go after based on the current market conditions. So if we're looking at XPEV and LI and NEO, they're stocks that we really like to trade every day. They check off both boxes of liquidity and active average true range, where the average true range is up there, right? But if you go out to the longer term time frames and you see how long the order flow has been in these stocks, this was amazing. But the tape, which we usually use on the weekly chart, has kind of changed. It's mostly been melted candles, a lot of indecision to selling. So when you put those pieces together and then you go in there and you're looking for profits, you have to add that up and basically say, what kind of profits am I going after in this stock right now, based on how long the order flow has been active in this stock, how long has there been institutional attention on the stock that validates my idea to buy. So let's wrap that up in a bow, because that was a lot. I know I'm on my second coffee here. We want to make our profit targets and our position size match how obvious order flow is. So in this case here, the higher time frame order flow in XPEV, LI, and NEO, very different from what Tesla's doing. And we'll take a look at the chart of Tesla in a second. So because they're bearish to sideways, the profit targets would be momentum trades in this case, as opposed to looking for a little bit longer term trades. So as this stock, XPEV, rallied yesterday, the proper way to manage this would have been as a momentum profit maximizer. And as soon as you saw some signs of weakness, you'd be booking that profit and going to the next trade, instead of letting this thing melt all the way back because you did not recognize what was going on. So this is a big part of trading, is really understanding what kind of profit targets should you be going after based on the current conditions. And then when you add more of that into the equation, like we're going to talk about today, we just mentioned industrial stocks. We're going to do a chart reading and tape reading example going through various industrial stocks. So as that sector works its way up over the day, the week, and the month, we start to do a little bit of a deeper dive into which of those stocks to buy now and which of those stocks will go into the tracking journal. So I want you to really get comfortable as you start to build out your confidence as a trader. There's a difference between a trading game plan and a tracking journal. Trading game plan are the stocks that you do your scans for and you run your nightly game plan. Those are the stocks that you're trading today. A tracking journal are a list of stocks that have to get to a certain level or certain price action, and then you put the trade on. So when we call out trades in the boot camp, I make a very clear distinction between an order and an alert. So an order means it's a stock I'm looking to buy now. I give the entry price, the share size, the stop loss, the initial profit target, as well as when we would use the profit maximizer. An alert means that it needs to get up to that level, and then we evaluate. I can't tell you how many good trades you will capture from now going forward because you understand the difference between a trading game plan and a tracking journal. So I'll give you an example. We're going to actually, let's actually do it right now. Let's go straight into that. And we will pull up the daily charts, and we're going to do it with the industrial stocks. So I'm going to actually come off the screen, and we're going to just go straight into some of the industrial stocks that match the list right now. There's 10 that I'm watching right now. So this is a good example here in General Electric where it's clearly banging its head at this level, which is like right around 107. So as this stock was rallying and as the industrial sector was rallying, I would have an alert at 107, then to evaluate the trade above 107. So right now it's actually pretty close to right there. So at this point, we'd have a buy stop up at that level for our initial entry. And this is a big deal. I want to make sure that I point this out. You can see on this chart, it got up to this level, got smashed, got up to this level and got smashed. But there is profit potential up to the 115 level. So roughly $7 or $8 and more through that if it gets through there. But this is where you separate yourself from somebody who's struggling, from somebody's like, I understand how to allocate capital when I'm looking to buy stocks. It keeps getting shoved back there, but it's a big level. So in this case here, I'd have initial share size smaller, looking for feedback from the market to get through there. So in this case, it was an alert, and now it's become an initial share size through this level for me. Okay. So we're going to work our way down the other 10 industrial stocks that I'm watching. UAL actually did what we're looking to see happen in General Electric. It actually blew through the $48, pulled back, paused, and now this sets up a new entry here because we technically have what's known as a bull flag, right? You have a bull market or a bull move, a momentum move, gets through resistance. This is a very clean bull flag, and we're looking for the next move back to the upside. We're actually going to use, we're going to talk about Fibonacci retracements in a minute and how to use them. Boeing is different. Boeing is a little bit different because now Boeing, you can clearly see even after yesterday's news in Boeing, we failed at this level, failed. Good news yesterday, got hammered right back down again, opening up higher this morning. So now you have a choice with Boeing. Does Boeing go into your trading journal or your tracking journal? In this case, both, if you're a day trader and if you're a swing trader. Because what ends up happening here is we're looking for yesterday's good news in Boeing to follow through, but we're going to day trade it, but set an alert above 229, which is still $2 away. So it's going into our day trading game plan, but our swing trading tracking journal, because right now that longer term move to the downside is still in place. So we have $2 worth of profit based on where it's trading right now up to the next resistance level. We'll reevaluate Boeing after that. So that's kind of cool. We actually have two different game plans. Trading game plan for day trading Boeing today, tracking journal with an alert set at 209 to look for a new swing trade. Okay. So we're going to work our way over into some more. We actually have Caterpillar is the next one we're going to keep an eye on. All right. So Caterpillar is in the stronger sector, but clearly still bearish order flow. So this would technically be an idea that would be in our tracking journal. And our tracking journal, we would need to set an alert that matters to us, which is this level it just came back from. So it'd be this area over here, just above 200. Now, this is an important thing to discuss as well. When a stock is down here and you want to be alerted when it goes up there, and I'll show you Morgan Stanley in a second as well, because that's been a stock that we've been watching. and is actually on our list of stocks to get long today. Because that's the level that matters to us, and let's just say in Caterpillar it's 202 in this case. As it's going up, you don't want to set the alert at the exact price. You want to set the alert just below that, so you're aware that it's getting up to that price. You want to check out the volume. You want to check out the price action and determine, do you want to get through that level, or is right now the good time to get it? But you always want to have that alert set beforehand. But you can see in this case here, Caterpillar, the right sector, but not a trade yet like the others were. So in this case here, Caterpillar would go into my tracking journal, not my trading game plan. Okay. So we're going to walk over to the next one, PCAR. Okay. Same thing. Still in a bearish order flow. CP, not yet. UNP. So these are the strongest stocks over the last 5 days in the industrial sector. CNI. So I'm giving you a list right now so you can actually make your own list off of this. And then 3M. Okay, 3M, which actually had pretty good price action over here, but has not been able to hold it. It's actually, you can see it's not a coincidence here. It's forming support at that same level again. So why is all this important, right? Traders who get paid on a regular basis are constantly massaging their list. We get this question all the time. When do I add stocks to that list? When do I take stocks out of that list? And it really comes down to how obvious is the order flow. And actually, we talked about it yesterday. You break it down even further. Let's say you have a list of stocks going into September, and now October starts tomorrow. So maybe going into October, you did a scan that was as simple as show me all of the stocks that are averaging 1 million shares per day. So they got institutional attention. There's liquidity there. Show me all the stocks that have an average true range of at least $1.50. So that means that we have opportunity. And show me all those stocks that are also above the 50-period moving average. Right now, that list, I'll actually run that list for you. Let's actually take a quick look. If we go a little deeper, just the list of stocks that meet that criteria is, let me just break that down a little bit. 55 stocks. So how interesting is that? How interesting is that the market went from really strong to now only 55 stocks are above that key 50-period moving average. That's pretty interesting. So now you every week, every day, you start to work that list a little bit. You're adding stocks, you're taking stocks out. Why? Why are you doing that? Well, you want to only be in the stocks that have smart money attention. Remember, our job is to find ideas that have smart money attention, and then we look to buy those stocks because they're already going in the direction that we want. We had a big conversation last night in our beginner coaching call where we talked some newer members of the boot camp out of buying stocks just because they're going down, just because that they've gone too far recently, and that makes them buying opportunities. 3 weeks ago, it was $120. Now it's $65. It has to be a good buying opportunity. No, that's garbage. That is the hardest way to make money, guessing a bottom. As a matter of fact, there's no reason to guess a bottom. It's our job. And again, only 55, right? That meet that criteria. 55 different opportunities for you to look for an entry right now. That's a lot of stocks. Now you take the next step and you make a determination of what we just talked about, like we just did in the industrial stocks. Which of those stocks would go into my trading game plan for this week? Which of those stocks would go into a tracking journal when they hit certain price levels or when the risk-reward ratio actually looks a little bit better? So actually somebody just typed in Apple before. Let me see, it was Updahl. So we can take a look at Apple showing weakness in the last 3 or 4 weeks. So if we do the same type of analysis looking at Apple, you can see that it's clearly below the big 50-period moving average that we're talking about now. It's also broke this trend. So if we take the 50 off of here, and hopefully you're a regular viewer of the channel, which, by the way, do me a favor and hit the subscribe button and the thumb up button if you find these videos helpful, because I really hope I'm helping you make better decisions. So Apple right now, Apple had the iPhone 13 come out. It had their conference. Stock's done nothing but sell off to slowly drip lower since all of that happened. It really didn't move the needle. Apple as a company is becoming a little bit more of a mature company. If you were trading Apple last year at this time, maybe beginning of the summer prior to the split when it was right around 400, the momentum was amazing. As of right now, as of this moment, and we're going to get into a head and shoulders top that we're looking at right now in the SPY ETF, As of right now, the order flow is bearish. So if we're looking at Apple right now, this is one of those situations where it's not that far from all-time highs, but it's certainly not a bullish environment right now for the stock at all. Let's take that a step further, where if we're looking at the daily candlesticks of Apple, remember, we want to trade stocks that have smart money attention. The institutions are involved in that stock. And the fastest way to see that is, are there large green or red candlesticks? That means that there's enough buying and selling pressure to open it here and close it all the way up here. Apple right now, if we zoom in on that just a little bit more, you can see recently we're actually starting to see a lot more indecision, a lot more smaller body candles where they're opening and closing at the same place. So right now, Apple is neutral at best to me right now. I need Apple to reverse this last 4 weeks of selling. Something else that just happened is the market showed some relative strength recently, and the stock really didn't bounce with it. So also showing some relative weakness. So we have an uptrend that was broken, a downtrend that was confirmed after we broke and then traded back below. And now we have what we have, this 142 double bottom support, I guess, for lack of a better way of putting it. So as of this moment, I don't have a reason to be a buyer of Apple as a swing trade. So I want to see stocks that have a good likelihood of moving in my favor over the next, let's say, 3 days to 3 weeks, depending on how the market's trading. So I would zoom down a little bit further now on Apple, and I'd probably drop down to the hourly chart, and I'd be looking for this selling to break before I got back involved. I'd want to see that the smart money is starting to get back involved in the stock. And that means that we need to get back above the 145 level. So if we take it back to what we were just talking about, we need to now, and there you can see pretty clear there. If you remember what we just said about tracking journal versus trading game plan, right now for me, for Apple, what I'd be writing down in my tracking journal is I'd want to see it hold this 142 support. If it does, then I want to see the stock go well bid on the daily chart. So hold the 142 support. Then I want to see it go well bid, which means I want to see higher highs, higher lows, and closing on the highs, and get back above and close above 145. When that happens and all of that unfolds in my tracking journal, then I set an alert at 145 and I say, okay, let me know when it gets there, because that means the other stuff that I scripted unfolded, and now we can start to look for an opportunity back to the upside. Otherwise, we're just guessing when Apple's going to turn around. There's no reason to guess. Script it out in your tracking journal like I did, set the alert, and then if it starts to follow through, then you look for your entries and you start to build your position. And that's the reason a lot of traders get into troubles, because they're guessing it fell too far. And I think that the best example of that right now is here. The stock has been rallying quite a bit lately, but we talked about it yesterday on our beginner coaching call, which we have every Wednesday night. When this stock gapped down over here from 125, I believe it was, we had a lot of members of our community who were brand new to the community who came in, and they was, oh my gosh, it was 125 a couple of days ago. It just fell $45. This thing is a steal. I want to get long the stock. And I went a little crazy during our coaching call, and I built like 75 different reasons, exaggerating a little bit, of why it's still not a good idea yet. Remember, we actually had a good question this morning at like 5 a.m. this morning from one of our new members of the community, Juan, and we were talking about initial profit targets, ultimate profit targets, and how to manage a trade between your initial target and the ultimate goal. And it comes down to, you need an initial profit target to justify taking risk. But going back to that and looking at Sava here, absolutely a stock that we have in our game plan, or at least on our radar every day in our community. We're always looking for entries in as far as a day trade. But this question was about swing trading and buying it on the way down when it was getting smashed. And we said, don't bottom pick. You're fighting the smart money right now until you see signs of it reversing. Then we can start to look to actively trade the thing a little bit more aggressively. And you can see over the next week, thankfully, we talked this person out of it. It went from 80 down to 39. In trader language, that means the stock got a 50% haircut. So if you really want to sound great at a barbecue this weekend and you want to sound like you're super smart, when a stock falls 50%, it's a 50% haircut. So we stopped this person from taking it. But remember what we just said about Apple, what we're looking to put in our tracking journal for Apple, and the price action we needed to see before we start looking to buy? Well, let's take a look at this stock over here. Let me zoom this out a little bit so it's easier to see. Going down still, right? Nope, not yet. Going down still. Nope, not yet. Going down a little bit. Not yet. Maybe something. Maybe it's green, right? All right. Melted candle. And there's well bid. That's what we're looking for in Apple right now. It's still going down. It's still going down. We want from one day to the next, or in 1 week to the next, to show them a little bit there. And you can start to see that we're starting to work our way higher. So over the last week or so, we have actually been day trading Sava with a little bit more confirmation from the smart money, in the sense that the stock actually started to rally. So we didn't pick a bottom. We said, show us when it's the right time. Smart money stepped in. Our money stepped in, and we've been day trading it up to that point. I'm still not ready to swing trade it yet, but because the attention turned and we started to see that the smart money was paying higher prices, we're like, okay, somebody's stepping up. Let's get in there and let's start to day trade that stock. This is how you put the pieces together. There's 3 pillars to setting all of this kind of stuff up, which is the foundation of what we do in the New York method in the boot camp, which is stacking the order flow, which is what we're looking at right now, reading the tape, which is determining profit potential. Is it too early to buy? Is it okay to buy? All of those kind of things. And the third part is risk reversal. Risk reversal is when you understand the right position sizing and you take all that stress out of the downside of a trade, simply because you understand stacking the order flow as well as understanding how to read the tape. And we get a lot of questions about what it means to do the tape reading, and to really put it in actionable way for you so that you can actually use it today. Tape reading is about building an argument for whether or not right now is a good time to buy. And that has to do with order flow. That has to do with momentum, how far the stock has moved recently. That has to do with profit potential. It's a small checklist, but once you have the checklist, you find, okay, it's going up really hard right now. And I'm actually going to show you a stock from yesterday. EA, actually. We're going to talk about these two to kind of finish up the call here. EA was amazing again yesterday. And what are the odds, though, right now, if you put on a trade in EA for a new swing trade? The odds are pretty small that this is going to open higher and have another big day to justify to the next target, which you can see up here is right around 146. So how much would you need to risk on this trade for a swing trade in order to justify it being higher than 1-to-1? I'll look to day trade this stock today, but I won't look to swing trade it, because the risk reward now at this moment, based on tape reading, is a little bit closer to 1-to-1 as opposed to 3-to-1. So it'll definitely be in the trading game plan for day trading today. But because of how far it's moved recently, the swing trade needs to pause first, or maybe even pull back before we put a new trade on. DLTR, one of the stronger stocks yesterday, if you didn't happen to catch it yesterday, monster move yesterday, 16 and change. We're actually looking for a follow through today. Again, I'm not looking to swing trade this because of the size of the move. I am looking to day trade it, though. That's a monster move, a $16 move punching through 100. And if you zoom out just a little bit, this is a big resistance level. So again, getting a little bit deeper into this trade, where is the profit potential if you take a new swing trade today? So you need to justify a longer term trade here, but you see a wall to the left where sellers just would not let it get through, and then it got crushed again in the previous earnings. So in this case here, I'll day trade it up to 103, but it'll be in my tracking journal for a trade over 104, because I wanted to get through there more than just hitting this level. Okay. So we covered a lot of stuff today. We covered the industrial stocks, and I gave you a big list of industrial stocks. We did a deep dive into Apple, but let's actually finish up. You know what? Let me I'll pull it back up on the screen because we want to finish up talking about this, which is the SPY. So we mentioned the SPY today, and we did a couple of things last night in our coaching call. First, we looked at basic Fibonacci level, and we actually went from the beginning of 2021. And all we're looking for here is we're looking for spots to anticipate buying coming back into the market. I can't express this strongly enough, whether it's moving averages or whether it's Fibonacci levels, however you determine, it could be stochastics, however you determine overbought, oversold, spots to look to buy, stochastics in multiple time frames. Just remember that they are subjective. It's areas you expect something to happen. And I think moving averages are really probably the most common one, but you still need confirmation from price action. So if you see a level such as the 50-period moving average in the SPY or whatever you happen to be looking at, That's just a expected level. You still need price action to confirm at that level, like we just discussed in Apple, where it's going down. Then it went, if it goes well bid, we'll get involved. Sava was going down, went well bid, then we look to get involved. There's a lot more to it than that, but that's the first thing you can look at and actually use today. So using Fibonacci levels here in the SPY, which is nothing more than a projection of different levels where you technically find support, we're kind of holding right now at what should be the first level of support. If this level doesn't hold, then 420, 422 would be the next level after that, which you can see here right around 419.91. That's one way of putting a projection on. So this is a pretty good area for us to reasonably expect that buyers are going to come back in, which would still validate this much, much longer term uptrend. Another way to do it, or something else that we want to pay attention to, for those of you that are classic technical analysts, we have a head and shoulders top here, and this is technically what's known as the neckline, and technically that is where we've been breaking down from in a classic pattern. But I want to finish up on that, okay? Head and shoulders were invented in like 1940 something, right? Probably in Edwards and McGee, way back in the day. The market has changed dramatically since the 1940s. Head and shoulders 100% are still valid to pay attention to, but I challenge you right now to go back over the last 10 years and come up with a bunch of head and shoulders that were like, yeah, it was clear as a bell and the stock just rolled over and it was that easy. Right now in this longer term bull market and that level that we just showed you, the SPY broke just below that level and came right back. So those longer term patterns, while they're interesting to watch and interesting to pay attention to, we have to keep in mind that the market's changed dramatically. And if you've ever tried to map out, like I want to draw a picture of the perfect 5-minute bull flag, they're a lot harder to find than they used to be, which is why you hear me talk a lot about a push and a pause, because it's really more about the price action than finding that exact head and shoulders top, that exact bull flag, that kind of stuff. So the head and shoulders top, while you can say it's obvious here, I lean a lot less on those older classic patterns because the follow-through just isn't the same in the algorithmic driven world that we have right now. Plus, we have a much different way of trading right now with all the algorithms that are in there, the different players, the speed of information that we have these days. So it's kind of interesting to look at the head and shoulders top. I don't rely on them as much. Maybe you do. Maybe you can leave a comment. That would be kind of cool. But I want to tell you why I showed the Fibonacci levels. If you think from a just a common sense perspective, right? If we're talking about a stock that goes up, it pushes and pauses and goes up and you go a certain distance, right? All the way up. What does the Fibonacci actually tell us? And again, don't worry about all the different levels and whatnot. If we go up and pull back and then start to go back up again, right? What does that shallow pullback tell us? That shallow pullback tells us that all the buying pressure that pushed that stock up in the first place is still there. So if we push up and don't pull back that far, like we just pulled back roughly 28%, somewhere in that area in the SPY, that's a relatively shallow pullback. If we find buyers here at this level, that means that the longer term trend, the people who are purchasing longer term are still valid. It's when we pull back deeper that the existing trend before that starts to weaken. Because if those buyers are still here, it shouldn't be able to pull back deeper. So right now we're kind of at the precipice in the SPY where if we're watching this, this is still considered a shallow pullback in the context of this much longer term move. It's when we start to pull back deeper, like right here would be around a 50% retracement. That's when we can really start to get into, okay, maybe it's changing a little bit and we have to start to reassess. And how do you reassess and still find good opportunities when the market's going down? Exactly how we started today's video out, which is going deeper into sector rotation and then finding the stronger stocks that are leading in those stronger sectors. All right. We covered a whole bunch of stuff today. I just want everybody to know how much I really appreciate that you're here with me today. I have to head on over into our boot camp game plan meeting, which starts in a little bit. So thank you so much for joining me here, everybody. I do want to say, if you haven't joined our private Facebook group, absolutely click down all the way down in the description. There's a link in there for you. There's more videos for you to watch. It kind of brings all this stuff together. And if you want to learn about what we do on the other side, also learn about the boot camp, please do me a favor, give us a thumbs up, click subscribe. I'd really appreciate it. Have an awesome day, everybody. Thank you so much.